Hello viewers, welcome to my channel. I am Hasham. So now I am going to start the next problem on profits and gains of business and profession. Already 9 problems I have completed. Now I am going to start the 10th problem on this topic. So my regular viewers already might have watched all the previous videos on this computation of income from business, that is profits and gains of business and profession. So if you have joined in between, you may not be able to understand. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel. Select the subject income tax 1 and the topic profits and gains of business and profession. Watch the introduction part, first part, second part, third part. Definitely you can get a lot of knowledge from these videos. So if you want the complete command, just follow my instructions, because on your request only I have started this subject income tax. So I got many comments, many requests from the students to start the subject income tax. I have explained all the provisions, how to compute the profits and gains of business and profession in the previous problems. So if you are new to my channel, I suggest you to visit the playlist. I have uploaded so many videos on different subjects: financial accounting, advanced accounting, cost accounting, management accounting, and corporate accounting, income tax, business statistics, financial management, investment management. So many videos I have uploaded. Select your subject, select the topic, watch the video, and definitely you can increase your knowledge. You can get a good command on your subjects. So now I am going to start the next problem, that is problem number 10. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So keep the problems ready and start watching the problems. First one, 10th problem. Compute income from business of Madhu from the following information. So a profit and loss account is given in the problem, and we are required to find out income from business of Mr. Madhu. So in profit and loss account, the net profit is given as 5,08,000, our starting point. You can see here, computation of income from business of Mr. Madhu for the assessment year. Net profit as per profit and loss account 5,08,000. To this we add inadmissible expenses, means those expenses which are debited to profit and loss account, but Income Tax Act has not allowed it. Income Tax Act disallowed those expenses which are debited to profit and loss account. Those expenses we will add back. These are called inadmissible expenses. Then after that, incomes taxable separately. Some incomes may be credited in P&L account, but Income Tax Act says these incomes are not business income, so we deduct. Then we allow some deductions which are given by Income Tax Act, but it is not debited to profit and loss account. Now we'll deduct it. Now, first of all, before starting the problem, we'll see the adjustment. Other information: salary include proprietor's salary 10,000. Salaries which are debited to profit and loss account includes the salary paid to the proprietor. So salary to proprietor is a notional expenditure, it's not a real expenditure. So Income Tax Act will disallow. Second, depreciation allowed as per Income Tax Act 1,30,000. So in the adjustment it is given as per Income Tax Act depreciation 1,30,000. So this will be allowed. And the depreciation which is debited to profit and loss account will be disallowed. Add back. That's it. Now debit side, I am going to read out the items. First one, salaries. But it is given in adjustment, salaries include proprietor's salary. So proprietor's salary will be disallowed. Salary of proprietor 10,000. Disallowed. Second, income tax. Income tax is given on the debit side. It is disallowed because income tax is a personal tax of the SSC, not a business expenditure. So disallowed. Next one, sales tax. It is allowed. Sales tax is a business tax, so it will be allowed. Next one, bad debts. Bad debts are allowed, assuming that the SSC has satisfied all the conditions. Now RBD, reserve for bad debts. RBD stands for reserve for bad debts. Income Tax Act has disallowed. Bad debts are allowed, but expected bad debts are not allowed. So reserve for bad debts are expected bad debts. Disallowed, RBD. Then depreciation, disallowed, because separately we will allow depreciation as per Income Tax Act. So this depreciation disallowed. Donations, any form of donations are disallowed. 50,000. Interest on capital disallowed, not allowed, it's a notional expenditure. Then drawings are not expenditure, it's the amount withdrawn for personal use, disallowed. Over. All the debit side items we have seen, whichever items are disallowed, we have added back. Now total of addition added 3,10,000. Add up 5,08,000 plus 3,10,000, 8,18,000. Less. Incomes taxable separately. Now see the credit side of profit and loss account. Is there any income which is not taxable as a business income? Yes. Gross profit is a business income. Rent is not a business income. It is taxable under income from house property. So we deduct the rent. Rent 2 lakh. Bank interest is taxable under the head income from salary. So we have to deduct bank interest 10,000. Total 2,10,000 subtract 818 minus 2 then 6,08,000. Now deductions allowed as per IT rules. One deduction is allowed, that is depreciation, as per IT rules 1,30,000. Deduct 4,78,000 is the income from business. In this problem, in examination, you have to write the working notes also along with this computation, because examiner asks you why you have allowed, why you have not allowed. Just like rent we have not taken, in working note you should write down rent is taxable under income from house property. One working note, bank interest is taxable under income from other sources. Next working note, salaries are allowed but proprietor's salary is disallowed, it's a notional expenditure. Income tax is disallowed whereas sales tax is allowed. Bad debts are allowed whereas the reserve for bad debts are disallowed. Like this, donations are disallowed, interest on capital, drawings are disallowed. These are the working notes you should give in examination. Now, problem number 11. Income and expenditure account of Mr. Amresh Kumar, an advocate of Nalgonda, for the year ended 31st March 2020 is as under. Compute the professional income for the current assessment year. So here in this problem, it is asking you to calculate the professional income. Advocate, he is an advocate, the SSC is an advocate. So he is having some income and expenditure. See, normally business people will make profit and loss account, whereas professional people will make income and expenditure account. The name is different, but the accounting treatment is same. Whatever rules we are following in profit and loss account, the same rules will be applied in income and expenditure account. The debit side we take all expenditure, credit side we take all incomes. If income is more, it is called surplus. If expenditure is more, it is called deficit. Simply we have changed the names. Instead of profit and loss account, we are calling it as income and expenditure. Instead of profit, we are calling it as surplus. So exactly similar way we are calculating. Computation of professional income of Mr. Amresh Kumar for the assessment year. Surplus as per income and expenditure account 4,16,000 given in the problem. Adjustments are given. Closing stock of court stamps 2,300. Court stamps is an expenditure for advocate. It is allowed as deduction. But some court stamps are remaining unused. Stock is there. So this should be deducted. Actually debit side you can see court fees and stamps 27,600. So he has purchased the stamps for rupees 27,600, out of which 2,300 stamps are still not used. So this 2,300 are not allowed as deduction because it is already debited. So this 2,300 we add back to profit. Then office expense include 23,000 as personal. Personal expenses are not allowed. So office expense personal we disallow 23,000. That's it. Remaining procedure is exactly same. We have taken surplus as per income and expenditure account, add back inadmissible expenses. We see the debit side of income and expenditure account, whichever expenditure not allowed by Income Tax Act, that will be added back. Office rent allowed. Office expenses, it is given in adjustment. Office expense include 23,000 as personal. The office expenses 23,000 will be disallowed because it is personal. Office expense personal 23,000. Next, salaries to staff allowed. Court fees and stamps allowed. Income tax disallowed. Income tax disallowed. Printing and stationery allowed. Municipal taxes on let out. Municipal taxes on let out building. When building is let out, rent received is taxable under income from house property, and municipal taxes relating to let out house is not a professional expenditure. It is not the expenditure of the profession. It is separate. So municipal taxes on let out house, add back, inadmissible. Traveling expenses allowed, telephone charges allowed, shares purchased, it's a capital expenditure. When shares are purchased, it is an asset. So capital expenditure disallowed. Shares purchased 69,000. Books and journals allowed. It's a professional expenditure. Books and journals. Life insurance premium on wife, it is disallowed. It's a personal expenditure. So life insurance premium disallowed. Over all the inadmissibles we have taken, take the total 1,33,400, add up 549,400. Now credit side, which you see, which are the incomes which are not taxable under income from profession. Separately it is taxable. So income and expenditure account, credit side. By rent received, no, rent received is taxable under income from house property. It's not a professional income, so deduct. Rent received 1,84,000. Next, dividend. Dividend is not at all taxable. It is tax free. So dividend will be deducted 46,000. Next comes special fees. It is professional income. Whether normal fee or special fee, it is a professional income. Nothing should be done. Gifts from clients. Gifts from clients is also a professional income. Then interest on bank deposit, it is taxable under income from other sources. So deduct income on interest on bank deposit. Then insurance claim. Insurance claim received is not an income. Insurance claim is a contract of indemnity, making good the loss. So insurance claim is not an income, subtract. Next one is examiner's fee. That is also professional income. Legal fees, it's a professional income. That's it. Take the total. Total is 4,14,000. Subtract 4,14,000, 1,35,400. Now we have seen that some stock of stamps, court stamps, are remaining unused. Those stamps already we have debited to income and expenditure account. The stock value is 2,300. That will be added back. So 1,37,700 is the income from profession. This is the first problem where we are computing income from profession. So far we have done income from business. Right? Again, in working out all these points, you have to write in examination. I am not writing, I am just explaining. You have to remember that rent received is taxable and income from house property, dividends are exempted, special fees is a professional income, gift from clients is a professional income, interest on bank deposit is taxable under income from other sources, insurance claim not an income, examiner fee, legal fee are professional income. Agar professional income hai to nothing should be done. Leave it. If it's not a professional income, we should deduct. Debit side, office and all these things you can give the explanation. Now 12th problem. Dr. Ganesh submitted the following statement. Compute income from profession. Again we have to compute income from profession. Here we are given receipts and payments account. Receipts and payments account, and one adjustment is given. See, previous problem income and expenditure account was given, but here receipts and payment. The method is we take all professional receipts. On receipt side, all types of receipts are given. Whatever is received is given, but we should take only professional receipts. Revenue professional receipts. From this professional payments, the receipts minus payments will get the income, right? That is the procedure. The receipt side, consultation fees. Consultation fees is a professional income. Nothing, you should take it. Receipts, consultation fees, it's a professional income. Whatever is professional income, then only we should take. The next, visiting fees, it's a professional income, so we take visiting fee. Sale of medicines, it is a professional income, so we have taken sale of medicines. Dividend receipt, receipt side dividend is given. In working note you should write on dividend received from Indian companies are fully exempted from tax. Then interest on fixed deposit given. So interest on fixed deposit is taxable under income from other sources, not professional income. So leave it. Don't take. Only 3 items we are taking: consultation fee, visiting fee, sale of medicines. Take the total 5,86,000. Now payment side. Ambulance van rent. This doctor is maintaining ambulance. So ambulance van rent, it is allowed as deduction. It's a professional expenditure. So ambulance van rent, professional expenditure, 34,000. Purchase of medicines, 30,000. It is expenditure, professional expenditure, allowed. But adjustment is given. Stock of medicines at the end of the year is 10,000. 30,000 worth of medicines are purchased, but 10,000 medicines are still in stock. So how much are consumed? How much are used? 20,000. So 30,000 minus 10,000, 20,000. Then salary to staff. It's a revenue expenditure. So take salary to staff. Then income tax paid. Don't take. Income tax paid is a personal expenditure. So we should not take. We should take only professional payments. Professional payments we should take. Then purchase of surgical equipment. Remember, surgical equipment is an asset. Asset purchased. So it's a capital expenditure. We should not take it. We should take only revenue expenditure, not capital expenditure. Later on, depreciation will be allowed on surgical equipment. It comes under machinery. So later on we will give the depreciation deduction. Then purchase of life-saving equipment. Again, life-saving equipment is a machinery. It is not taxable here. So depreciation will be allowed. Purchase of shares. It's a capital expenditure, not allowed. Then water charges allowed. So water charges 600. Then telephone charges 2,500. Then electricity 1,200 allowed. Then donations 29,000 not allowed. Donations are not allowed as deduction. General charges 4,000 allowed. General charges 4,000. Subscription to journals 5,900 allowed. 5,900 journals. Subscription to journals. Purchase of books. Purchase of books is a capital expenditure. There is difference between journal and books. Journal are periodical. The life of the journal is very less. 15 days or 1 month, its life will be over. So subscription to journal is a revenue expenditure. When books are purchased, it's a capital expenditure. So books purchased will not be allowed as deduction. But depreciation is allowed on books as per the income tax rules. So later on we will give the deductions. So we have taken all payments, revenue payments. Take the revenue payments 83,600. So 5,86,000 minus 83,600, 5,02,400. From this we deduct. Deductions allowed as per IT rules. First, depreciation on machinery. Last line in the problem it is given. At the beginning of the year, WDV of assets, machinery 2 lakh, building 8 lakh, furniture 20,000. The beginning of the year, some assets are there which are used in the profession. So depreciation is allowed when assets are used in the profession. Machinery 2 lakh. 2 lakh rupees machinery was there at the beginning of the year. And during the year, some surgical equipment are purchased for 2 lakh. Surgical equipment is also one of the machinery. The beginning of the year 2 lakh machine, during the year 2 lakh rupees machine purchased, so totally 4 lakh. So 15% of 4 lakh, 60,000 depreciation allowed. It is not given in the problem. You have to remember how much rate of depreciation on machinery, 15%. Depreciation on building. Beginning of the year building value was 8 lakh rupees and rate of depreciation allowed as per IT rules on building which is used in the profession is 10%. So 10% of 80,000, 8 lakh, 80,000. Depreciation, furniture. Last line. On the last line it is given furniture at the beginning of the year was 20,000. The rate of depreciation allowed on furniture is 10%. All these are the rules you have to remember. What is the rate of depreciation on machinery? 15%. Rate of depreciation on building? 10%. Rate of depreciation on furniture? 10%. So 10% of 20,000, 2,000. Depreciation on life-saving equipment. Again, income tax rules. According to income tax rules, rate of depreciation on life-saving equipment is 40%. During the year, life-saving equipment was purchased for 1 lakh rupees. It is given in the problem. 1 lakh rupees. So 40% of 1 lakh, 40,000. Lastly, Depreciation on books purchased. Last line it is given books purchased during the year. Books purchased were 13,000. 13,000 rupees books were purchased. 40% is the rate of depreciation. So 40% of 13,000, 5,200. These are the depreciation provided on different assets which are used in the profession. Take the total of these 5 items, 1,87,200. This is the deduction allowed by income tax rules. Now deduct 5,02,400 minus 1,87,200, 3,15,200. This is the income from profession. I have not given the working notes here, but you have to write. I have explained you at the time of listening my lecture. Immediately note down what I am saying, and the same thing you have to write in examination regarding the notes. So we take only professional receipts. Professional receipts like consultation, visiting fees, sale of medicine. Other receipts like dividends, we have not taken. Dividend are exempted. And interest on fixed deposit, you should write in working note. It is taxable on income from other sources. Similarly, purchase of medicines, all these things. Whatever I have explained, you have to give in working notes. So I have completed problem number 12. So if you are satisfied with my lecture, give a like to the video. Share it in your group, in your friend circle, so that more students can watch these videos. Give your comments. And lastly, subscribe my channel if you have not yet subscribed. We'll take up the next problem in the next video.